All right, welcome to StockPulse Silver Symposium number 2 here. We're on location, Airway Heights, just outside of Spokane, and I've got Nathan Wilson here from Independence Money, and sure appreciate you coming to the show, Nathan. You've got a little different take on things here. You're a tax specialist, and one thing we do know is taxes are going up here, so I'm eager to kind of dive in with you here. So I guess let's start here and tell us a little bit about Independence Money.
Yeah, Independence Money, I mean, we focus on tax strategies.
Yeah.
There's an element of asset protection in there.
Okay.
And a little bit of dollar diversification, but I think on dollar diversification, that space is provided for by more knowledgeable people here on certain investments and sectors. But what I find is all investments have one thing in common, and that is taxes. And oftentimes taxes is the greatest investment expense.
Sure. Yeah. So get into solving a problem here for people. Taxes are going higher. They need to cut their taxes. Just hired 87,000 IRS agents to go out and get those taxes. How are you going to help them?
Well, the book, The Firm, written by John Grisham, it's got a great line. I quote it all the time. The IRS writes the rules, and we get paid to teach people how to play. A lot of these strategies that I teach investors, obviously were written by Congress. It's the strategies that they use to protect themselves from taxes. So they're perfectly legal strategies. It's just, I find there's a lack of knowledge in the industry on how to do these and that they're even available.
Yeah, that's a good point. I think they built the system for the people who want to go educate themselves to beat the system, I guess, if you will. So I guess talk about what you offer and how you're going to solve the problem. What are you going to do? Are you a consultant, or what are you looking for here?
Well, what I'm not is I'm not a CPA. You know, that there's a lot of good CPAs out there. We work with them on our team. A lot of times I find CPAs are kind of like recording the history of last year. And there's only so much magic you can do once the calendar closes on December 31st. Like, the problems are already written in the history books, right? So what a certified tax specialist does is we focus on the present day problems, next year's tax problems, 10 years from now's tax problems, and we create strategies to protect assets and income from the theft of taxation. So for one of our big strategies is unrealized capital gains. So before you sell something, you're sitting on a huge appreciation, whether that be crypto, precious metals. We work with a lot of real estate investors. They're sitting on a huge unrealized capital gains, and we can mitigate up to 99% of those taxes if you deploy the strategy before you have the buyer.
So in this room here, we've got a bunch of enthusiasts here, silver enthusiasts, junior mining enthusiasts. Market's been down, probably going to turn up here soon. There's going to be a lot of money made. So I guess talk to those people about how they need to come see you when the money's made.
Well, specifically on the precious metals, what most investors are surprised to learn is there's no long-term capital gains. So if you were to own, say, a miner, a stock, right? And you were in the 15% tax bracket and you had a long-term capital gain, that tax bracket drops to 0. But let's say you're in the top tax bracket of 42%. Long-term capital gains peg out at 23.8. That's it. That's as high as they can go under current law. When it comes to physical precious metals, it's 28%. So if you're in the 15, it's 28. If you're in the 42, it's 28. And there's no 1031 exchange. So if you wanted to swap from, eagles to bars, it's a taxable event. If you want to switch from gold to silver, it's a taxable event. And that's why I think we're speaking tomorrow about strategies you can do. We also do a lot of self-directed IRAs and Roths where you don't have to worry about the taxes, and you could own real estate and precious metals in those strategies.
So how popular is your business right now, Nathan? I got to believe it's an uphill battle to maybe, I don't know, have people consider using you when they might think maybe you're tax evading, or is this a sensitive topic with people?
Tax evasion is illegal. Tax avoidance is
go.
perfectly illegal. So is it an uphill battle? So we actually implement strategies. We offer a 30-minute complimentary consultation. We have clients hire us to develop personalized education programs and strategies for them. But a lot of times these ideas are talked about on our YouTube channel, Independence Money. Talk about uphill battle. You can hardly find us unless you go direct. Like, you can search on the topics. We're not going to pop up. We've had people that subscribe to our channel. They're not notified of new posts. So somewhere in the great universe, they're saying, hey, keep this message quiet. Quit teaching people about these strategies. I find that as validation that I'm onto something here.
Yeah, what would be your average client? Is it a high net worth person, or is it just anyone can take advantage of these tax laws?
You know, some people, just the everyday American, it's as simple as structuring an LLC properly or setting up a self-directed Roth IRA. These are easy strategies to deploy. We teach a lot of those on our Patreon channel that you can get for like $20 a month. I think when you get into tax pain points, meaning it starts to hurt, you're around that $400,000 taxable income. Now, maybe that's earned income, or maybe that's just a one-time, transaction. Like maybe you make 100 grand, but you've been holding this real estate for 10 years, and then when you sell it, you trip over that $400,000 mark. That tends to be the wealthy that all the politicians are saying, hey, let's the wealthy aren't paying their fair share. That's not a 400 millionaire. That's 400,000 is what they're going after in the tax code. What I'm concerned about, Rob, is I don't want to be a fear monger, but the budget proposal of 2023, I don't know if they're going to pass all of that, but it's got some nasty stuff in it, and it's targeted towards real estate investors that are using the 1031 exchange to defer their capital gains. And it's targeted against eliminating the step up in cost basis at death, so you can trigger capital gains as well as possibly estate taxes when somebody passes away. I like to call a rose. I don't like to say estate taxes. It's a death tax, So let's get ahead of the problem before they pass the legislation. Let's get a strategy in place, and that's why I appreciate you inviting me to speak tomorrow to get some of these ideas out.
Yeah, so again, you said you're censored a lot here, but go ahead and give the pitch right now why people need to call you.
You just got to get a strategy before they pass the tax legislation changes and before you make a sale. And you just got to set it up right. I'm a big fan of saying, begin with the end in mind. Don't buy something before you know how to get out of it and what the ramifications are, right? So, you can check us out at www.independence-money.com or on YouTube or Rumble at Independence Money, and reach out to us at team@independence-money.com if you want to have a phone call.
Okay. Nathan Wilson, Independence Money. Appreciate you coming by.
Thanks, Rob. Appreciate it.